Well, hello everyone. This is Price Headley. Happy to have you with us here on August the 3rd, 2009, as we look at the early Monday morning activity, looking ahead for the week ahead video outlook here. Here we're looking at the Dow DIA, the Dow Diamonds, tracking the Dow Jones Industrial Average. You may recall that in the past week we talked about the big breakout above the acceleration bands. Of course, that happened back on the 20th of July. And you can see what's happened to the market ever since that point when the Dow had closed that day at 88.33. That was two closes above the 20-day acceleration band, which is my standard time frame that I like to look at there, and you can see it led to a major move. 88.33. Here we sit right around 92.5. We've busted through that 9,000 level on the Dow Jones Industrial Average, roughly equivalent to about 90 on the DIA. We were sitting there for a few days this past week, but have flown through that. And you can see, of course, percent R also very strong, having given its bull confirmed signal as well, also on the 20th, as we talked about last week. So, we've got a bull market happening here in the short haul. Have to respect that and say, where do you get on board? Well, you can see from the last move that we had when we broke out on percent R, had that breakout above the acceleration bands. If you wait now for the retest, I think that's going to be the better strategy. You can see we haven't had a retest on this latest move, but if you are patient, you won't get whipsawed when you get the inevitable little pullbacks within the uptrend that's emerging. So, our expectation is that yes, we are in a strong rally mode, but that you want to be patient, wait for the pullbacks. Watch this percent R, for example, the big trends way, using the 30 bar setting as just one of the basic tools. You can see there's several of those retests we had along the way. First one happened at the end of March, next one on April 22nd. Next one we had was May 13th. And so bottom line is that you get several points along the way within an uptrend to jump on board. But at the same time, you don't want to just chase recklessly. That's the danger, is that you can get some type of a snap to the downside just to flush out some of the weak holders of these stocks, and that creates opportunities for us. If we quickly look at the S&P 500, you can see a similar pattern compared to the last breakout coming off the March lows, where we bumped into the upper acceleration band, and that was a stopping point most of the way. Of course, this latest move has a lot more power to it than that move did, and so we have to respect that and say, yes, it is still bullish. You don't ever want to try to fade a market just because it looks quote-unquote overbought. That's the whole point of percent R, is that it says overbought markets can stay overbought like they did from late March all the way through again until about early June to mid-June, really. That was a very strongly overbought period for the most part. Would not be a market you'd want to fade and bet on the downside. You want to get yourself in alignment with the overall trend, which is, as you see here, up. Just looking to buy the next pullback as we get that opportunity. S&P, of course, doing battle with the 100 level on the SPY, the spiders, which trade about 1/10 the value of the SPX, the S&P 500 index, doing battle at the 1,000 round number mark. And then for the NASDAQ, QQQQ, PowerShares NASDAQ 100, NASDAQ's been leading the way throughout this bull run since the March lows. You can see that, again, we've blasted off here as well. You can see, look at how strong percent R stays up here in the high 90s, literally for the last week or so. We finally got a reading down under 90 late last week, but here we are bumping back over 90. We haven't seen the retest back to the 80 level yet, so we're staying patient here, not chasing anything, waiting for that pullback. But the bottom line is that it's a bullish trend. NASDAQ continues to lead, and that's usually a good sign for the market when NASDAQ is leading the S&P and the Dow, as I talk about in my DVD course. Now, last little quick comment is the VIX, the volatility index that CBOE tracks, the VIX. You can see that from our big trends charts. You have to put a caret sign and then VIX, and that gives you the VIX reading. And you can see that we've been hovering near low levels in the last week. Even with the market marginally firm, NASDAQ was up about 0.75%, and we had a situation in which we see that we've got a VIX that's rising, telling us if volatility is too low and it's hovering down near these lower bands. When we got down to about 23 on the VIX, back here on the 24th of July. Well, now here we sit with the VIX hovering around 25.92, and we're saying, okay, look, we've got a range between 22.5 and about 30, 29.7 right now, and so we're right about in the midpoint of that range. So, VIX has come right back to its 20-day moving average. We're saying, from here, definitely a chance that you could still see VIX spike up towards that 30 level. If you do, that would probably be a pretty good buying opportunity where fear would be relatively high. And remember, it's about relative fear and greed. That's what we're looking for, is that relative high in fear. On a little pullback in the market should create a spike in fear. That should create our next good buying opportunity. So stay alert for that. Hope you have a great trading week and look forward to seeing you back again early next week.